The PayPal chart reminds me of the market cycle chart when you have massive euphoria, then complacency and anxiety, denial, panic, fear and capitulation, depression and disbelief. It's the same exact chart. It's absolutely crazy. And over the last few days, I've been seeing a lot of signs of capitulation. I've been seeing a lot of posts on X of people selling PayPal, giving up on PayPal, many different posts. And I haven't really seen this before to this magnitude. But again, you can't really blame them because if you look at the PayPal stock chart over the last 5 years, you had a negative 74% return and one of the greatest bull runs we've ever had when many stocks went up hundreds of percent and you had a 0% dividend. So it's been a really bad performer. And a lot of the posts were mainly alluding to the management team that they made a lot of mistakes and they haven't really delivered. And I kind of agree with that. And the management team, I should say the analysts, also agree with that because they recently downgraded PayPal from $93 to $68. That was a massive, massive downgrade. It was absolutely brutal. But I believe a lot of investors are taking it too hard on the management team. Because if you look at what they're doing a lot of good things. They're diversifying the growth of PayPal. Now, PSP is starting to grow profitably. Again, if you look at the total payment volume in terms of transaction, it has been increasing every single quarter. This is not a sign of a dying company. Yes, it's not growing 20, 30% anymore, but for a mature company like PayPal, you're not going to really get it. But I think the management team is still doing a good job in terms of the growth. If we look at the active accounts, total active accounts, they were increasing by 2 million every single quarter with the exception of the last quarter. And this is a situation that we should monitor. But the trend has been really good and it has been improving. So I also believe the management team did a good job on this area. They are also returning back to growth, where the company was decelerating in revenue growth due to the Brain 3 contracts, where they had a lot of long-term contracts that were unprofitable. They canceled them and they focused on profitable growth, which is why the company's revenue growth is picking up again. So all those things are really not bad at all. I mean, what are you really expecting from this management team? PayPal is not going to be growing 10, 15, 20% again. I think 5, 6, 7% is a decent achievement from the management team. And they were also buying back a lot of stock from 1.1 million shares, and they've been reducing them a lot. And that's really good. And that's what they should be doing whenever PayPal stock is trading at 11 times earnings. I mean, it's really hard to not be buying back stock at 11 times earnings. And it's really hard to say that PayPal is not a bargain at 11 times earnings. But whenever you have a stock that's been going down for so long and it looks cheap and it's still growing, most people believe that it could potentially be a value trap. And this is a question I would ask myself. But if you look at all the metrics, the right metric, quarterly revenue growth is accelerating, active accounts are accelerating, payment volumes are accelerating. None of those things are indicating that PayPal is a value trap by any means. If it was decelerating in revenues or declining in revenues, then you could say, yes, the PE ratio of 11 times is a trap. But I personally don't believe the PE ratio of 11 is a trap at all. And if we look at the company's guidance, they are still guiding 6 to 7 billion in free cash flow for 2026. If we take the 7 billion and we take around $1 billion in stock-based compensation out of the free cash flow, we end up with about $6 billion in net free cash flow that the company can use to buy back stock or even reinstate a dividend if they want to put in a dividend. And the company's enterprise value is about 60 billion, and we have 6 billion of net free cash flow. So this is over a 10% free cash flow yield on the company. So in other words, the company can afford to retire 10% of their shares every single year without them having to take on any leverage, net of stock-based compensation. This is really cheap. It's absolutely insane. Maybe PayPal is not the sexiest company in the market, but as Howard Marks says, it's not what we buy, it's what we pay for what we're buying that dictates if something is a good investment or not. Sometimes you might buy a high-quality growing company, but if you're paying 200 times earnings for it, you could still lose money. But if you buy a okay company for maybe 10 or 9 or 5 times earnings, you could still make money, even though the company is not great, but because you paid the right price. And this is something that's very, very important. Now, in terms of the annual return with PayPal, I'm seeing a 10% free cash flow yield, and I would add in the revenue growth, assuming free cash flow margins remain the same. Revenue growth is about 5%. expected to pick up, which actually is amazing, to 6% and 7%. Again, this is not some kind of a rapidly growing company, but that's PayPal. It's more of a mature company. So we put in, let's say, an average of 6% revenue growth and 10% free cash flow yield. So I'm seeing a 16% annual return on PayPal, and this is excluding a potential multiple expansion on a free cash flow basis, on an earnings basis, from 11 times maybe back to 13, 14, even 15 times would make a huge difference. But if that doesn't happen, I'm seeing at least 15 to 16% annual return on PayPal from today's price. So I believe holding PayPal has been frustrating to many shareholders. And I believe PayPal kind of feels like a value trap when you look at the stock and you look at the PE ratio and the stock hasn't moved. But if you look at the growth, at earnings per share growth, free cash flow generation, all the metrics around active accounts growing, if active accounts were declining or if they start to decline, then we can say, yeah, maybe PayPal is a value trap, but I'm personally still not seeing it. And if I had to guess, I would guess that PayPal will likely end up being acquired. It could be by maybe Apple, it could be by some kind of another company. And under the Trump administration, this is the best time for a mega cap or a large cap to acquire a company like PayPal. And this would be a very valuable acquisition, in my opinion, especially for maybe one of the companies that own one of the LLMs and they can integrate it within the PayPal ecosystem and process payments and do many different things. So I think PayPal will most likely get acquired, maybe as soon as 2026, but I think this is a pass for the company. But if it doesn't happen, I'm seeing a 15, 16% annual return with a potential of a multiple expansion that could lead to over a 20% annual return. So you guys have asked me about my opinion on PayPal, and this is my opinion. So I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.